Hi everyone, my name's PK, and here I have Lynn Dang, who's a client of the Property Investment Accelerator. She's built alongside her partner a property portfolio of $2.39 million. That's five investment properties, and she's in digital marketing. She's based in Melbourne, and in this episode, we'll talk about she emailed me, and what was really inspiring was that she and her partner had clear goals. So I thought in this episode, we'll talk about goal setting and strategy when it comes to property investing. We'll talk about lending strategy because I know that mortgage broker and lending strategy has been a key pivotal, how do you say, like lynch point or aspect of her portfolio that has allowed her to get to five and hopefully beyond as well from this point onwards. We'll talk about that. We'll talk about how Lynn has done property investing with her partner and how that helps, having another person there. And we'll also talk about various other things and let's see how this conversation goes. But as I was saying to Lynn before we hit record, she's done incredibly well, five properties at such a young age. And Lynn, once again, congratulations. And I'm really happy and proud of what you've achieved.
Thank you, PK, for having me and for inviting me for this opportunity.
No, it's my pleasure. Well, let's start from the start. Like, even before you did the course, what's been like your property experience in Australia?
Before I did the course, I started in 2020. That's when I guess that's the year where everything changes. So we got COVID hit, a lot of things happening economy wise. And then my partner and I, we had certain saving. And then we thought to ourselves, maybe it's time to explore our investment options. And of course, we both working full time. But then we start talking about future. We start talking about building up our nests and where to go. So we did sit down. We did try to look at stock investment. We look
Mhm.
at various options. And then we start talking about properties, I guess. And yeah, I mean, it's fast forward, joining various webinars, joining seminars, just trying to understand because we don't have any background in properties. We don't have backgrounds in investments. And we literally just grab information from the internet, from talking to friends, talking to colleagues, and even our families. They don't have backgrounds in investment or in property per se. So yeah, 2020 we first we just learning, okay, what way should we go? Are we doing buy and hold? Are we just flipping? Are we renovating? Are we So there's a lot of things happening. And the main thing is, I guess, my partner and I, we always discuss and we bring on different perspectives into the conversation. And sometimes it's a heated conversation as well, just to challenge each other. Okay, is there a better way? Is that way suitable for us? And we do look at our own personal budget as well, just so we can make sure, okay, we understand our cash flow before even we go and find a mortgage broker. So then pretty much the next step is when we decide, okay, let's just jump in, let's give it a try. We also kind of have a idea, right? We're gonna target a house. We want to target an existing house in a kind of growing suburbs. But at that point, we were just okay listening to everyone because I'm in Melbourne. We both live in Melbourne for some time, so we thought, okay, let's targeting southeast suburbs of Melbourne.
Mhm.
Yeah, and then I remember that time we talked to a mortgage broker. We are okay with the borrowing capacity. We set a budget for ourselves, just 400K. Not too high, not too low, I guess, but just a starting point for us, a comfortable point, I guess. And then we started with inspections every weekend. I guess the first one, we were both very new and we wanted to actually see places, see houses, see suburbs. And yeah, it took us about 6 months until we actually kind of like finding a deal, getting the property that we like, and we put forward an offer. So it's not an auction, it's just a private sale.
Hmm.
And I mean, a bit of a funny part is when we went to see the property, and the sales agent was there. It happened to be that the sales agent was one of my partner's friend,
Oh,
and
okay.
then we got some insight, I would say, interesting information because of the sales, as in, I think the family, there's a divorce going on,
Hmm.
and they need to offload the property as soon as possible. So we were like, okay, right, what does it mean? We didn't know what does it mean.
Right.
And the sales agent was saying, okay, I can help you to finish it off. See, they need urgent sale. This is a price point and you guys can take it. So we ended up signed a contract for 385 for the first one. Yeah, so I would say yes, an element of luck in the
Right.
first one,
Right.
knowing the inside information. Now that we're looking back, it's in Cranbourne, so it's a house. I would say small land size, not too big. Now that I know what I know,
Hmm.
the rental yield is actually on a conservative side, so under 5%, just 5% ish.
Hmm.
But we look at ourselves and we was like, okay, so we can actually do it. As in that first one, so we were both, okay, should I sign? Should I not? Do I need to read? There's so many things happening in our heads at that time. But then everything went well, the loans went okay. Yeah, and fast forward, that was back in June 2020. That I guess both of us had a taste of property investment, and we like, right, what's next? We, the excitement of looking for one, buying one.
Yeah.
And I guess at that time, I think we had a good entry point for the price, and the suburb itself had a good run. So then we looking into equity withdrawal loan, just so we can somehow maybe move forward. So then in 2021, we got the equity out from the first one. We moved forward to the second because we had a good experience with the suburb. We just looked around suburb. We didn't really go and search for some other suburb to invest in. We thought, well, why not? Why not? This was a good one. So we went to kind of a neighbor suburb,
Okay.
and we had the second one. We also had a different experience. So it was a townhouse, but it's only in a block of two, and it's freestanding townhouse. So at that point, again, we didn't know the difference between, okay, townhouses, freestanding townhouse, freestanding house, and then we start learning on what does it mean, how does it behave, how will that be different than the first one. Then yes, we gathering information. We know that there is no body cop into that the block of two, at least in Melbourne, Victoria.
Hmm.
And yeah, we just move forward with that. The second one in Cranbourne North in 2021, and the price purchase was 470. So it was again okay, in a sense that it's under our budget. In terms of rent, again, it was not strong rental. Yeah, it was okay, 5%, I think, and we always be able to balance off with our cash flow.
Hmm.
Yes, it was negative gearing, but at that point, the interest rate was low.
Yeah.
We're talking about 2%, and we fixed part of our loan for the second one with that 2%, and yeah, but only for 2 years. So when the interest rate started to go up, it kind of okay. But yeah, so that was our first two that we bought before we started our journey with your course.
Right.
And then I guess after the first two, we have a time to sit back and review, okay, what to do next. Are we done? Are we going forward? What else can we do? We start thinking outside the box because now we have two in Melbourne and Victoria.
Hmm.
And we always heard about investment. You need to, kind of don't put all the eggs in one basket.
Right.
And we start thinking, okay, is there other places, is there other suburbs that we can look into, can we consider? And we started joining your group, listening to your podcasts, watching your YouTube videos, just like this one, and kind of learning and seeing how people commenting and the idea of investing interstate started from then.
Right. Right.
Yeah.
That's
So
that's an amazing story so far. I think inadvertently you probably invested in some of the best locations in Melbourne at the time. Um, I mean, through anyone who's listening to this right now in 2025 is probably thinking, wow, under 400K in Melbourne, at a 5% yield, I'll take that, right? So I think that those are good decisions. I know that you mentioned that the land size wasn't ideal, but sometimes I'm not saying that people should make sacrifices in terms of due diligence, but there's something to be said about just taking action. If you had not taken action in 2020, 2021, then you would have probably been in an inferior position than, versus what you are now. So I think all those listening to different masterclasses or webinars or free content, it's had some positive effect. All right, and so now you've got those two investment properties. Let me ask you one question before we go into state. W- Why, like, you and your partner, you were saying you always have conversations and you challenge each other. It seems like a very productive partnership, when it comes to property. Why not just stop at two? It's like you're doing mo better than most people. Not that it's a competition, but you got these two properties in Melbourne. They're doing well, cash flow wise, they're okay. Why not then just say, okay, let me just spend the next 10 years trying to pay these things down? Why, why did you think of continuing to expand your portfolio?
that's a very good question. So even when we finished with the second property, we did have a conversation about, because currently we are renting, we're still renting.
Hmm.
We have a conversation whether should we go ahead and buy a place to live, a principal place to live. And of course, knowing Melbourne, the places, the suburb that we want to live in would be quite expensive. We're talking about above million. And it was like, okay, are we willing to put that much money down just to, and then pretty much paying loan for the rest of our life? So that's where the point, things kick in terms of a conversation on passive income, the conversation about are we going to work until, say, we're 60, 60 plus, or do we want to create an option for ourselves to say, right, we just want to work, but it's out of our passion, it's out of our hobbies, or we have to work because of the money. If you stop working, the money stop coming in. So when we consider passive income, then this is before even I know about your course. We like, how can we create a passive income? Is there maybe stock, maybe, some kind of fund or managed fund, or how should we do about it? And the more we look into properties, the more we kind of, it's just out of curiosity at the same time, we're still searching for an answer.
Hmm.
We know what we want. We don't know how to get there. We don't know what the solution is. So then we're like, how about, because we read there's so many people talking about they owning multiple properties. How do they do that? Or is it rental income? Because we have experience with the first two, and clearly the rent's coming in. Yes, you have costs, you have maintenance costs and whatnot, but the rent is coming in without you actually spending a time of working, say 8 hours a day for it. So that is something maybe working for us. And and then we do sit down and to see how much money do we need in order for us to say live our lifestyle even without our active incomes. Then I think we work out to above 100K per year, say 120 to 150K per year. So in
Hmm.
order to get there, we just okay, maybe multiple, and then we talk about multiple income streams, and then we talk about uh, right, in order to achieve that number, we have to make a move. I guess it's one idea lead to another, and then we're trying to find a way around.
Hmm.
So yeah, and then we talk about okay, I think we need to go down the path of maybe we try to build a portfolio rather than just one or two without any strategy behind it. We started it without a strategy. We started it just to say, okay, everyone talking about property investment, why not? But then slowly reforming our thinking around, okay, is there a strategy behind? Is there a way that we can do it efficient? And is there a way that we can do it? Because both of us are quite risk in like we're not really wanting to take risks
Right.
in a way. We want to reduce or at least manage whatever that we want to do. We know investment involving risks. So yeah, that's how we kind of, I would say, step by step get into the point of maybe it's time for us to look into a proper some guidance, some guideline, so we can build a strategy. And I guess another thing is actually before we took your course, we took another one as well. We took the previous one, another course. It was also in property investment, and it also involved in helping us to manage our cash flow, more like understand our cash flow, set us with certain objectives. So I guess from that course we learned, okay, you need to set objectives to build your strategy, and
Hmm.
then you need to manage your cash flow, understand the in and the outs, and also predicting what are the major costs. Of course, you leave, and as you leave, you would have certain spending that you need to attend to. So that course, even until now, we're still managing and understanding our cash flow and projection through it. But with that course, what I found out was the the property investment part was very very conservative. So the projection in terms of property investment was maybe every 2 years and every 5 years, then you would move to the next property. It's very conservative. It was good as a foundation for us too, but we didn't want to wait. We didn't want to. I would say, I don't know. We wanted to find out: is there a better way? We always want to find out: is there a better way to do about that? So then we keep searching, and then we found PK Group. I myself, I took time to kind of digest. your information,
Hmm.
all the whether it's in the podcast form or video form or just conversation on the group. So, and it took me a good 4, 5, 6 months to reach out to say, okay, maybe it's worth it for
Yeah.
to invest in a course, like invest in that course as well. So yeah, that's kind of our, I would say the whole journey, how we
Yeah.
get there.
Yeah, makes sense. Thanks for sharing that. It seems that it was at that juncture that you were looking for guidance and you're looking for, like more of a strategic approach to fast track or expedite your property investing. And I think it's quite normal, like, you strike me as a sort of very switched on person, very, very intelligent. Normally, people like you, they don't want to leave any money on the table, so to speak. You want the most efficient and effective way to do something, whatever that is. This happens to be property investing. Um, and so, could we talk about? I mean, obviously, you've bought three properties since then. I want to talk about like lending strategy. I know that you've been through, I think, multiple mortgage brokers, if I'm not mistaken. A lot of people who will be watching or listening to this will be scratching their heads and thinking, oh, Lynn seems young. She doesn't seem like she's on $1 million a year in terms of income. How has she been able to like buy these five properties? So do you mind like taking us through your lending structure with respect to um, I don't know, like which banks and interest only versus principal and interest, and whether you've fixed loans or variable loans, and just just how you've been able to get so many properties.
Yes, that is also another exciting journey as well. So, true, I had experience with multiple mortgage broker. The first one helped us with the first three properties. Well, the mortgage broker was competent. There's nothing wrong with the person, as in we very enjoy working with them. But then I get to the point after the third one when we really need to, because of course as you're buying, your borrowing capacity is reducing as well, and it's getting harder and harder as you accumulate.
Hmm.
So there was a point of time, I guess it's a pivotal point, where after the third one, then I wanted to review what is our borrowing capacity. I had so many questions about whether or not should we buy the multiple lending structure. We're talking about trust, SMSF, or our own names. So for your information, all five properties are under our own names. So after the third one, we again in the crossroad of deciding where to go, turn left, right, or straight. Then when I talked to my back then current mortgage broker, they they assisting me, they answer my questions, but that didn't feel like they can challenge, they can give me new ideas. Have you looked at this? Have you thought of that? So, for example, if I ask the person, do you consider trust? Should we look into trusts? And the advice would be, of course, it's a good advice. Go talk to your accountant. But I guess what I wanted more was, why should you ask, why do you want to look at trusts? Is there a reason behind it? Are you
Mm.
consider multiple purchases? That's what I wanted to hear. That's what I wanted to get challenged so that I have to think about it more like. So I was like, okay, maybe we should talk to someone else who had more experience with building a portfolio, with assisting multiple purchases back to back, maybe. And then and of course, I talked to my partner. Let's see, where should we go from here? And we reached out to a couple of brokers, and we talked to them. And I guess one of them. So when I sent an email explaining this is what I want. I wanted to reach to 7 to 8 properties in total. So that's our objective. And we want to get there as soon as it possibly can. Of course, we're talking about up to maybe depend on our borrowing capacity as well. So what I was really impressed with this new broker was he took a time modeling everything down and the presentation, and both of us, me and my partner, we was in the meeting, a video conference, and then the person he went through step by step. Okay, this is number. At that time, we got three, so we move on to number 4, 5, 6, 7, right? Then for each purchase, he even can draw up where should you get the loan from. Of course, before that, he got an interview to get to know us,
Yeah.
and also more like gathering information about us. And the main question I remember was, are you okay with not a tier one bank,
Right.
as in terms of lending institutes or non-bank lenders?
Right.
So then we, again, it's new to us. Like we all of our loan for the first three was with Big Four bank, and it was like, what's the difference? And then even during the meeting with him, he challenged us. So when we, I remember when we asked about, okay, should we set up a trust to buy the next property?
Yeah.
So he asking me, why do you think setting a trust would be better for you? Is there a reason behind? And we couldn't answer. We really couldn't answer the question. Is there a reason behind setting a trust? Or just because you heard so many people saying so, then you should do so?
Yeah.
So we're like, not really any reason. We're talking about maybe preserving our borrowing capacity, same old, same old. And then the the broker kind of saying, okay, first of all, of course, there's always pro and con on any action you take. Setting a trust, you need to consider the cost behind, the ongoing costs. Are you aware of all those? And then, of course, the property stay with the trust, meaning you cannot take advantage of negative gearing, or if it's going negative, have you thought of all that? Yeah, and of course, it's complicated process. We
Hmm.
did set up a trust, not for property buying, but for just other purposes.
Hmm.
And we know how much to go through with an accountant, and also the cost involved as well. So we're like, and then again, he was explaining, okay, buying under the names with different lenders doesn't mean that you stay with the non-bank lender or the third tier lender all the time. After some time, maybe after some years, then you can always refinance back to the mainstream banks,
Hmm.
so that you feel more comfortable. And also, certain lenders they have backed by banks. So again, it's all education for us. So we're like, okay, and then of course, he is very confident. He
Hmm.
knows what he's doing. He himself an investor, so we kind of look up to him as right. He been there, done that. So if it's possible, meaning it's possible for us to do, yeah, and that's the start of the conversations, and then we had a lot of things to take away, to think about it. And soon we came back to him saying, right, yeah, let's go. And then we started with the equity withdrawal from two of our properties just to prepare ourselves for all the fund and capitals for purchasing multiple properties after that. And throughout the time, like the whole journey with him, even with the loan, multiple loans, very clear in terms of like all the options that he set out, all the information he set out, and it's really straightforward. So I would say, yeah, in some and a funny story is sometimes I feel like he also pushing us because we said to him, okay, this is the objectives that we want to achieve, and we even said to him this year we want to move fast,
Right.
possibly consider two properties in a year. So every time when we got loan, what do you call it, equity loans out, and the second equity loans out, and then he will come back saying, "Okay, what's next? Now, are you moving to consider the purchase now? You ready to go? Let me know." So in a way, we have a person who, forming part of my team of the whole investment property, and he also very switch on. He's also very fast forward. He also, I would say, knowledgeable.
Yeah.
Then I feel more confident. We both feel more confident of moving forward and knowing we have our back. He has our back in terms of the lending. He been clear from the get go. We know where we're going, which bank ish or lenders we're going with, and to the even the estimated interest rate. So
Nice.
yeah,
Nice. It's really refreshing, like that you heard about different strategies like, buying through a trust, but you didn't just go in it willy-nilly thinking, oh, this is what everyone else is doing. You actually took the time to consider it, ask the right questions, and then when you had a devil's advocate asking you, well, what do you really want to do that for? If you're not able to be like have conviction, then there's no point just following other people. I mean, I could interview another client and they might have bought in trust, and for them that might have made sense, and for you it doesn't make sense. And I think that's the beauty. Everyone is different. Everyone has a different risk appetite. Like you said, there's pros and cons to everything. For you, the cons outweigh the pros. For another person, the pros may outweigh the cons, and that's why you need mentorship. And I think mentorship doesn't just come from a person like me. It comes from, there's an element of mentorship that comes from each person in your team, like conveyancer, mortgage broker, property managers, etc. And that's really what gives people like ourselves the confidence to scale our portfolio when we know that, all right, no one really cares about my money as much as I do, but these people kind of have my back, like they know what they're talking about, and their confidence then rubs off onto us, and then we're more broad-chested in our sort of confidence going forward. So that's what I'm picking up, that this mortgage broker really enabled that for you. And obviously, you bought another three properties. Um, you hinted at the fact that you've gone with these third tier lenders, which of course have high interest rates. And you mentioned that in the future, you can always refinance to one of the big four banks, let's say, get that interest rate down. Can I ask, um, broadly, which locations did you buy these subsequent three properties in? And I'm sure they've gone up big time, but what is the yield that you bought at? And I'm just trying to understand, okay, well, interest rates are higher. What is the yield? Therefore, how much are these properties costing you?
yep. So the third one we bought in Perth, as you would expected, back in 2023. It
Yeah.
was not extreme early, but it was not extreme late. We kind of bought it right in the middle.
Yep.
It was super, super competitive back then. The yield was, now I have to trying to think back because since then, the rent has increased. So
Uh-huh.
now it's sitting around 6.3%.
Right.
Yeah. So that was back in end of 2023.
Hmm.
Then the fourth one is the first one that we bought in regional area. This is regional South Australia.
Hmm.
And yeah, the yield is sitting around 5% at the moment.
Hmm.
And the last one, which is we just settled back in about 2 weeks ago,
Hmm.
we bought it in another regional town in WA.
Yep.
And the rental at the moment because we bought it with a tenant. So the rental at the moment is 5.8. But once we expected the rent would increase after the current lease expire as well. So it has a very strong rental yield in the area. So we're talking about minimum six, if not above 6%.
Right, right.
Yeah.
So strong yields, when you started off with your Melbourne ones, they were kind of five or just shy of five. You got that one in SA, which is similar, maybe just a bit more, and then your
Mm.
WA ones that are really pulling your portfolio up. And I think that's the great thing. These are just yields at a particular moment in time, but a
Yes.
year later down, 2 years, 3 years, then the yield on purchase ends up being like 7%, 8%. And that's how property investing works. And it just continues rising. And then, yeah, properties that aren't positive cash flow become positive cash flow. You're able to get the interest rate down, if not rates coming down naturally anyway now. So, everything kind of just starts clicking into gear. And I think that's really cool that you've not sort of overthought the whole yield side of things. I know some people will let properties go because the yield is like 5.9%, not
Mm.
6%. But it's like in 2 years' time, in 5 years' time, like what does it matter? Like, you know what I mean?
Yeah, I totally agree with you on that point. So at the beginning, I didn't even know about rental yield to start it when I bought the first one and the second one. I'm like, okay, yeah, there's just some income in, so I'm happy with it. But I guess the more you're building the portfolio, what is more important for me is the cash flow. So yes, the whole portfolio for there's a holding cost for us, which is a thousand per month for all five of them.
Hmm.
And I'm just kind of bringing back to my personal or household cash flow. And with that number, my partner and I, we can afford it. We look at our budget, we look at our cash flow, and we can hold it. So that reassuring. And like you were saying, the rental growth is there on all of them, on all five properties. Hence, say 2, 3 years down the track, we can certainly targeting neutral. I'm always looking things at the conservative side. If you notice, even with
Mm.
my portfolio, when I'm modeling, I always put about 8% interest rate
Wow.
as my model, so
Yeah.
that I just put myself in the extreme position. And if things turns out better, then good.
Yeah.
And it cannot go worse than that.
That's funny. Actually, when I started investing, I used to use a 6% official cash rate in my modeling. And yeah, so most of the time it's been less than that. So that's always good. Good to be conservative. And then
Yes.
going forward, Lynn, I think you said before that your goal was 7 to 8 properties. Is that still the goal? And
Yeah.
and how far away is that?
It's still a goal. So initially, I remember it was eight, and then after some consolidating, as in because we're talking about the value of the property as well, the purchase price per property. So now I think the goal is about seven.
Hmm.
And at the moment, after the fifth one, kind of in the stage of again reviewing where we at. I like to always review after every single purchase. I don't want to move too fast and then I may miss things or I may make a dent on a budget.
Yeah.
So yeah, I'm at a stage to talking to broker to review because one of our loan actually gonna go to principal and interest by middle of this year. So I wanted to review that. And then I want to review our borrowing capacity after the last purchase to see, okay, when can we move next?
Hmm. Right, right. Makes sense. I'm very glad that the course has helped you look beyond Melbourne because I think, dare say, if you had stayed in Melbourne, then I don't know, like maybe you wouldn't have got the same growth because Melbourne's not been performing so well in the last few years at least. And also for diversification and high yield purposes. So I'm very happy about that. In terms of your personal, this is the last question, personal strategy, because you're at the moment renting. When you get to 7 properties, is your thinking that you will sell a few of them and get like a payday and then buy your dream home in Melbourne? Is that the strategy or is it something else?
Well, yes, I mean, from what the kind of the track that I'm following, after the accumulations, it will be the holding or the waiting time until my portfolio reach certain point where I can sell some, so I can maybe consolidate the remaining loans. However, at that point, I mean, again, we may have a different thinking, we may sit down and talk to each other. What else can we do with this capital, with this fund? Are we just simply pay off? Or are we gonna invest further? In terms of house to live in, I mean, that's not completely off the table, but we like to see, to be honest, from our point of view, we do see renting have a bring us some benefits as well. So we understand where we rent, as in where we live, better. So then we have more ideas of which areas we want to live, we want to buy or to settle down the track. And I guess we just we just kind of see how we go. And until
Okay.
we get there, we always can review. For now, yes, the decision is we're gonna just sell some and then pay off the debt. So we be a little bit reducing our debt, possibly debt free. But then by then, possibly we may change our mind. We can always review. The beauty of strategies or portfolio, I think, for us at least, would be we don't want to fix on something that we said today,
Mhm.
and then we don't want things to fix on stone. Say next year, 2 years down the track, 5 years down the track, we can always review to see our at that point situations. What do we want? What do we like? So we can be flexible at the same time, have a goal to head to. If that does it make sense?
Yeah, yeah, it does. I mean, having assets and having choice and optionality is always a good thing. Strategy can change, the goalposts can change, your goals can change, but because you've been working towards them, you have something to do something with, versus if you're just thinking, not taking action, then it's just all wishful, forethought, really.
Yes. Yeah,
Um,
and I think we like that way as well because we both, I mean, we changed a lot since we started the journey anyway. There was a point in time that we thought, let's buy a house and live in and just don't need to worry about all this so that they can just be like the people, other friends, talking about owning a house and be settled with it. We kind of the odd one. So,
Well, sometimes you got to be a bit different to succeed. Of course, everyone's different, everyone's unique, and that it can't be generalized. But the way that I sometimes approach life is that you look around. I look around. Not that I'm better than anyone else, but I look around and I see what everyone's doing, and I think, well, if I want to be super successful, then I got to do what other people aren't doing. And so if I do the
mm,
opposite of what they're doing, then chances are that something's going to open up for me. And that's kind of how I've lived my life, and it's, counting my lucky stars, it's worked out so far. So it's good to break the mold and go away from the herd, sometimes at least.
yeah, and I would say looking back now, we are grateful that we did take the first step. And then from then, we keep taking steps, baby steps sometimes, just to get going, I say. And we really enjoy the journey as well. So now, when I'm talking to you, kind of reminding me every experience across different purchases or different loans we apply for, or
Mhm.
different suburb or different areas that we look into. There's a lot of stories and a lot of lessons, good lessons, I would say. And it's kind of forming the perspective that we have today. And it's helping us on, at the same time, enjoying. It's not just about, okay, the numbers and the purchases, and you need to buy 10 property in 10 years, but it's more of like every property I really enjoy the
Mm.
time, either the time talking to property managers or the
Mhm.
time sometimes talking to conveyancer. Like I never seen them in person.
Right.
Those who are interstates, I really enjoy talking to them for some reason.
I think you're the only person who's ever said that. I mean, it's great. I love talking to my conveyancer. I'm just joking. No, it's great.
Yeah, and then yeah, it's good to know that there are a lot of good people, good
Yeah.
professionals out there as well. I would say, we are lucky enough to have, I guess, to meet more good and genuine people,
Hmm.
and also learn from them, and
Hmm.
also can feel like we have a lot of support from
Yeah.
them.
Yeah.
Yeah. So
No, it makes such a difference, I think, w- when you find genuine people. You just, I don't know, it just, there's something about it when you just can just take a sigh of relief and be like, I'm in good hands. I can do this. I think for me as well, it makes a big difference in any part of my life, really. Well, we better wrap it up because we've been going for a while. Lynn, I'm actually exceedingly happy to see a smile on your face and you share how you and your partner have enjoyed the process. Like you said, better than I. Numbers and everything are great, but when you can enjoy the process, then that's what life is all about. Not just waiting for some future goal, but enjoying the journey as well. So I'm really happy. I'm really happy and grateful that you worked with me and somehow I was able to contribute in a small way to your journey as well. And maybe in, I don't know, 2 years, 3 years, 4 years, when you've achieved all your goals, we can have another one of these sessions and your background would have changed. Maybe it'll be in your dream home. I don't know. But yeah, that would be pretty cool. But thank you for making time, Lynn. And I'm sure everyone got a lot of benefit. I appreciate it a lot.
thank you so much, BK. And I mean, I've been writing email and thanking you in every email of mine. But yes, I would say once again, both my partner and I, we learned a lot. And at the end of the day, that's what matter. We learn and we grow together with not just your course, but also, of course, the community, everyone else that sharing and kind of supporting each other. I do receive support from other community members from your group as well.
Uh-huh.
So that's kind of contributing into our whole journey and
Yeah.
kind of help us get going
Yeah.
and keep going.
Yeah. No, community is so important. I think with community, 1+1 equals 3, and that's the power of that community learning. So I'm thanks for the shout out for the community, which includes you, of course. So thank you. All right. Well, we probably I could carry on talking with you for a while, but we probably end there. Thank you, everyone who was watching or listening. I hope you appreciate the authenticity and the genuineness of these types of interviews. Really amazing people achieving really amazing things, just like anyone can, really. There's more than 200 of these client interviews on my client results playlist on YouTube. And like I always say, I genuinely don't really mind if you do my course or not, but go and watch and listen to people like Lynn, because they will serve to inspire and educate you. And I think that's the most important thing. Hit the subscribe button, hit the like button, share this episode with someone who can benefit. And once again, thank you so much, Lynn.
Thank you.